Please be advised of the disclaimers.
Hey, welcome back to my channel. It's Sai with Pinnacle Trading here. Today we're going to take a look at how you can get started with investing if you're new to investing, or if you just want to add some funds to your portfolio to boost it for the long term. And we'll look at how you can invest that stimulus check you got, the $1,200 stimulus check that you received, and let's take a look at it. So let's jump into it. So first we want to look to open a long-term account. Personally, I recommend, and I personally use TD Ameritrade. I use their Roth IRA. So all you have to do is just Google TD Ameritrade Roth IRA, and you can head over to this website, or just go to their main website and just scroll down to Roth IRA, or just click that open new account, and it'll take you to the process. It only takes about 10-15 minutes, and all you have to do is make an initial deposit, or you can open the account for free. There's no fees as well. There's no fees to buy stocks itself. So there's no account fees in that one, and also there's no brokerage fees, no commissions. It's completely free. So I really recommend TD Ameritrade. This is one of their platforms. This is more trading based. You can use their normal platform. This is called Thinkorswim by TD Ameritrade. So I'll show you 3 funds today. You can boost your portfolio if you're new to investing, or you just want to, boost your portfolio with these funds that I'm going to show you. You can add them into there, but these are the 3 main index funds. So we'll go over all 3. I'll go over them quickly and how much return you can look for in the long term. And again, please make sure to look at the disclaimer. These are not guaranteed returns. These are just expected returns, and based on the previous returns from over 10, 20, 30 years in the past. So first one we're going to take a look at is going to be SPY, and this one you can take a look. Let's take a look at the long-term chart. So we can look at these, and I'm going to remove these studies so we can just look at the chart. So we can look at the long-term on this one. Let's pull up maybe the 20-year chart, and we can see that, we can see from about 2001, we see about a recession every 10 years or so. We see market drop, but overall we're seeing this from at the lows about 60, 70, all the way up to about 339, 340. So we see a huge return, and S&P 500 covers about 80% of the market, a lot more. So this is more of a broad index fund. The next one is going to be QQQ. This is going to be the NASDAQ fund. And this one grows a lot more because this is more tech-based, and we have those bigger funds in this one. So these are usually those bigger companies, big blue chip stocks that are in there. So you can see that we have a nice exponential growth on this one over the past 20 years. And the last one's going to be DIA. This is going to be the Dow Jones. And these are all the spider funds, index funds. So every brokerage or a equity fund, they have their own different type that track the markets, but these are the ones that I really recommend, and a lot of people buy them in their Roth IRA or their 401k in their investment account. So let's take a look at what type of return we can expect on these. So you can just Google SPY performance or SPY return, SPY over the years, and you'll come up. I like Yahoo Finance. You can use this one. You can also use it on here on the chart tools, but to make it a lot easier, I'm going to show you based on Google. So we'll look at Yahoo Finance. So we can see that over the last 10 years, we're averaging about 10.43%. So let's call it 10% and be a little bit conservative on the numbers. And let's look at each year. We see 30, 20, sometimes we see red. We see huge crashes like we see in 2008, but look at the years above it, it comes back up again. So, looking at an average about 20 to 10 years, we're seeing about 10% return. So let's look at the next one. So that one was QQQ. So that is this one. I said this one was a little bit better growing, and we see about 10 year, we see about 15.92%. And you can look at each year if you scroll down. And the last one we're going to look at, this is going to be DIA. This is going to be the least growing, but again, still a solid one. So we'll look at DIA. And if you want to load up these symbols, all you have to click is right here, and you can just type it in SPY or whatever it is. And if you type that in, it'll come up, and just click on that one, or just click on the blue bar right there. And we see DIA, this one about 9.84%, but you see about 10-year average, about 10% return per year. And that's very good. If you're investing in individual stocks, it can be a lot more, a lot less, but these give you nice exposure to the markets of all of those stocks in the market. So these three cover anything like those FANG stocks, Apple, Google, Boeing, Microsoft, even those smaller cap stocks like Square, AMD, anything small to large cap, it covers all of them. So you don't have to pick and choose the funds that you want. So we cover the three funds. I showed you how you can get started with the Roth IRA or regular IRA, traditional IRA, or if you want to roll over your 401k to a Roth IRA, you can do that as well. Or you can message me in the chat room and ask me how to do that, or just Google it. So you want to open up an account, pick these funds after you deposit some money, put some money into these funds if you'd like to, and let's take a look at how much this money can grow into. So let's just say you're 25 right now. Let's take a example. Usually when people start investing, obviously sooner the better. I really recommend starting at 18, 19, whenever you can legally open an account where you live and just invest whatever money you have, whether it's $100, $1,000, 100,000, whatever it is. So the stimulus check was $1,200. Majority of the people got that. Some people got less, some people got none, but we'll go with the $1,200 full amount. And let's say we want to plan to retire at 67. That's about the average age right now. Obviously, we want to look to retire a lot sooner. That's where investing comes in and other types of investments. But let's just take just an average person example. We'll look at starting at 25. We want to look to retire at 67. So we looked at all these three funds. We looked at SPY, QQQ, and DIA. They were about 10% average, actually a little bit more over the past 10 years. But if you look at 20, 30 years, it might be 8 to 10, 8 to 12% return per year range. So we'll just go with about 8% just to be really conservative. So look at how much that 1,200 can grow into, about 34,000, give or take. So we started off with 1,200 and we're ending with about 34,000, some change. So that's it. So from 2020 to about 2062. But obviously we want this to grow into millions, a lot more. So let's do a quick number change. So we want to contribute monthly. So let's say we add about $250 every month to this account that we open with TD Ameritrade, and we're adding $250 every month. So we're starting with the initial balance $1,200 from month 2, or even the first month. Let's say we're adding $250 every month, which can be a lot or which can be less, depending on your income, etc., financial basis. But look at how much it can grow into. If we're adding $250 each month, it can grow into $1 million by the time we're 67. Let's say you can do more. Let's say you can double, and once you're growing and you're moving up in your career phase, let's say you're starting to make more money and you can deposit $500 monthly into the account, and you keep buying these funds or whatever other funds. Let's say you're getting a base average return about 8% per year. Let's calculate it, and we're doubling it. We're getting about 2 million. Let's say you can do a lot more. You're doing very well, and I know this is definitely a lot monthly. It can definitely grow into a lot more. So just notice that growing from, let's say, $250 to just $50 more, just notice that 270,000 difference just with $50 every month. So whatever you can invest, I really recommend investing that, putting it in, saving where you can, living below your means if you can, or just living a modest life and just investing what you can. So that's what I want to share with you, how you can get started with that stimulus check rather than blowing it on whatever it is that you want to. Now you can invest it and buy what you want later. Get over the instant gratification, invest in yourself, invest in your personal life, and invest for your future and future generations as well. So I just wanted to share that video. And if you want to get started with investing and you want to get some long-term investing alerts, we do have long-term investing alerts tab right here where we call out what stocks I'm picking out for long-term, what I'm adding, buying, selling, what I'm trading in my portfolio. I'll put everything in here. So if you want to join the chat room, you can head over to pinnacletrading.us, scroll down, join the chat room for completely free, clicking that button. And that's it. It's that simple. You can join the chat room. We have almost 1,000 members in here, and it's growing, so we can talk to other people in the general chat. We'll go over trades, long-term investments, etc. We also have a trade tab, so if you're more of an investor or if you're more of a trader, day trader, swing trader, we have that tab as well. So I hope this video helped you out, get you started on the investing path, how we can put that stimulus check to play so that you can turn it into a lot more money later on rather than just blowing it now. I know 200 may be a lot for someone, or it can be pretty much nothing, but it can grow into a lot more later on. So I hope this video helps you out. I hope you get started with trading today. If you have not, every day counts. So I hope you enjoyed this video. Make sure to hit that like and subscribe button, and I'll see you again in my next video. Take care.